Hello, this is Robert. I'm a tax attorney, and we're going to go over tax debt forgiveness programs for 2022. Your options explained by a tax attorney, which is me. Now, here's your most three common ways tax debt forgiveness can happen. There are more ways, but these are the most common. 1, offer and compromise. 2, currently not collectible status. 3, penalty abatements. Now, offer and compromise is the best option in the majority of cases, but sometimes when you got really old tax debts that are kind of close to expiring, sometimes you're better off going with currently not collectible status. If you're not really sure, call us and we can figure out your best option for free. Or if you are sure and just want help with it, you can also call us and we'll see what we can do for you. Okay, first let's go over offer and compromise, the best tax debt forgiveness for most cases. And it's settling for less than you owe, the golden ticket out of tax debt, the pennies on the dollar you hear about on TV, which often is actually less than pennies on the dollar. And what do they base it on? Your equity and assets, income versus expenses, basically how much money you got left over at the end of the month, your dependents, and the county you live in. So the dependents and the county you live in kind of go into that income versus expenses calculation. And if you Google collection financial standards, you'll see some of the numbers that the IRS uses that they kind of give you without really requiring you to prove anything. Okay, and here's some scenarios where offer and compromise is really not the best option. Low income but high assets, meaning you got a lot of equity in those assets. Well, sometimes it's a waste of time to submit an offer and compromise if there's really no way to explain away those assets. But there are times where it's worth explaining. For example, we had a client who lived in a mobile home that was $30,000, and we basically explained that the equity in that mobile home should not be considered because if he had to sell it and move out, all he'd be able to do is maybe pay rent for 2 years. And they accepted that, and they excused the value of the mobile home from the offer and compromise. Another thing, tax debts expiring soon. So you got tax debts that are expiring in 5 months. Well, you might not want to file an offer and compromise because you'll be waiting for the offer and compromise response, or at least a final determination of some sort, probably longer than that 5 months, and you would have already been done with the whole tax situation. So a lot of companies, a lot of tax attorneys, CPAs, EAs, they don't get that whole expiration part right. And so it's definitely something worth talking about. And you can call us and we'll figure it out for you. Okay, on to currently not collectible status. The debt might expire. You might have some equity and assets, but you barely make it month to month. You can probably get currently not collectible status. It's like a payment plan for $0 a month. The debt doesn't really go off the system right away. It's kind of still sitting there. It accrues penalty and interest, but you're not paying anything per month. But it's also possible your debts will expire without you paying. The debt expiring is your indirect tax debt forgiveness. And the IRS apparently lately has been a little bit more picky on kicking people out of currently not collectible status, but you can renew it as long as you're still barely making it month to month. So what they're supposed to do is look at your tax return every year and decide to renew it or kick it out, and you got to apply it again after that. What does happen to some people is they got on currently not collectible status, later they make more money, they get kicked out, and then they're asked to do a payment plan. So it doesn't always go the way you want it to go, where you just pay nothing. Another thing to consider, avoiding the debt and being out of the country can create a different type of CNC, currently not collectible status, that can extend the IRS statute of limitations. So keep that in mind as well. Okay, let's go over penalty abatements. And a penalty abatement is just removing IRS penalties. Penalty abatements are granted by the IRS for reasonable cause. The exception is on the first year. First-time penalty abatements are usually easy to get as long as the requirements are met. So that's getting a penalty abatement on the first tax year that you have a debt on and you have penalties assessed on. So if the prior 3 years to the first year you owe were not assessed an IRS penalty, then you should qualify for a first-time penalty abatement. And, a lot of people watching this video probably owe multiple years, but if you just owe 1 year, that's also your first year, and you can get this first-time penalty abatement. We got a link below to a guide on how to do that. Now, reasonable cause penalty abatements, they're hard to get, and you really need to have some real reasons of why you think you had reasonable cause to not pay your tax debt on time. See if you might qualify for tax debt forgiveness. Call us at 888-515-4TAX. That's 888-515-4TAX. 4829 or go to trp.tax/start. We can do a detailed analysis of your financial situation to see what results may be possible for you. Also, we can let you know what your IRS letter means for free. Send us a copy of your letter. We'll let you know what's going on. For a free self-help guide, maybe you're doing a tax case on your own, just Google TRP Tax Help Guide. Thanks for watching and have a great week.